What is up? What is up, everyone? We are back in another video, this advanced market structure PDF series. So we left off on AUDJPY, and our next example is AUDNZD on the 4-hour. So no time to waste. We already know what we're doing. So what do we see, right? See a series of lower lows and lower highs in this 4-hour structure, right? Little minor break of structure, retest, break of structure, right? So from this retracement here on the lower time frame, we're going to look at this area here from this break of structure to the downside. So from that, zoom in here, from that 4-hour point of interest, right? What do we see? Well, we see price trade up into that area, right? Right here, right? See price trade up into that area and give us a rejection. But what happens when we got this rejection right here, right? We got a break of structure. So we're waiting for this retest to give us a break of structure, right? And that's what we got right here. So now we wait for this retracement to occur back into that previous broken structure, right? So to where we can enter. You see right out here, this this pip counter, right? 89, 90 pips. And this setup right here was a 17-1 with a 5 pip drawdown, right? That's a really good trade. Really good setup, you know. But next example, got AUDNZD again on the daily time frame. And once again, what do we see? Right? See a series of lower lows and lower highs, lower low, lower high, right? And we get a break of structure, a strong break of structure from this move to the downside here. Sorry, I was checking the okay. All right. Yeah, sorry about that. All right. So series of lower lows and lower highs. So what does that put us in, right? That is a downtrend. So our higher time frame is bearish, right? Our daily. So we go to the 4-hour, right? And we see the initial rejection right here from that daily point of interest, right? And let's say this is that first minor break of structure, which catching an entry here would have been kind of difficult. But after this rejection here, price then gives another break of structure to the downside. And we see right here, this is that low that got broken. So what AUDNZD on the daily? So price comes back up, you know, we got the rejection from the daily point of interest. Now we got a break of structure on a 4-hour point of interest, right? So our entry would be in here, and this move went a max of 200 pips, right? So 4 hours starts breaking structure to the downside after giving a rejection from the daily point of interest, right? So now we're trading in line with the higher time frame, right? So your lower time frame now is bearish. So these are equal, right? These are equal. So when your higher time frame and your lower time frame are equal, right? You know you're trading in the right direction. So next example, AUD/USD on the monthly time frame. So purple. So what do we see, right? See a huge move to the downside, you know, after there was bullishness in this market, right? We start breaking lows, okay? So what do we see? We see a retracement back up into that monthly point of interest, right? So what do? We don't just enter here on the monthly. We have to go down to lower time frames, right? We have to drop down to a lower time frame. So from this monthly point of interest, we drop down to the daily. And now here's this initial rejection right here. You see this line? This is that monthly point of interest right here. And we see a huge rejection from that area. Now look what happened, right? A low gets created. Now this low right here doesn't come back up and give us a higher high. What happens at this low? This low creates a high, not higher than this one, and then breaks structure to the downside. See this move down here? This is shifting in market structure, right? This is a shift in market structure. So to capitalize off this now, we are looking at that previous broken structure for our entry at the daily point of interest, right? And this went a crazy 670 pips. It's actually a crazy setup, to be honest. So that was AUD/USD on the monthly. Next example, we got AUD/USD again, but this time on the daily time frame. So what we got? So just like how AUD examples have been, what do we see? We see bearish order flow, right? Lower lows, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, correct? Right? So what do we see here from this? We see a, an obvious huge impulse to the downside, right? So, we're looking in this area, and let's say in this area here, we had 2 points of interest, here and here, right? And which one is it? Which one will it be? Well, that's where this comes in, when I tell you guys all the time, if you don't know, if it's the higher one or the lower one, you guys need to wait for structure to be broken on lower time frames from this higher time frame right here, this higher time frame point of interest, right? So we wait for that rejection right here on a lower time frame. So we go from the daily down to the 4-hour. And what do we see, right? We have a rejection here. See this? Doesn't break structure, but it is still respecting bullish order flow, right? So our first rejection is a no-go. So price comes back up, right? Grabs that liquidity. Excuse me. Sorry. Grabs that liquidity, right? And then breaks that structure to the downside. So price retraces back into that previous broken structure. And this is where our entry can be, right? This is where we capitalize on it. As you can see here, right? Price gave us a break-of structure from the rejection from the daily point of interest, right? So, and a nice, another 300 pip trade. But yeah, that was AUDUSD on the daily. We dropped down to the 4-hour. And next example we will have in the next video, I'm going to cut it off here. We will start with CAD CHF on the daily time frame. But until the next video, I'll catch you guys later. Peace out.